Welcome to the Coin Bureau Weekly News Roundup. My name is Jessica, and here are the top stories in crypto this week. BTC's Contrarian indicator, a surge in spot Bitcoin ETF inflows, lead to speculation that the local bottom could be in for BTC. Everything you need to know. Ethereum ETF Expectations. Investors make big predictions for ETH after the spot Ethereum ETFs list. Why are early ETH holders selling? Veto the Veto. US politicians prepare to veto President Biden's veto of a recent resolution that could boost crypto's adoption. How this could result in a pro-crypto bill being passed. Geopolitical peace pivot. Ceasefires appear possible in the Middle East and Eastern Europe after a 180 by key players. What this could mean for crypto. And a closer look at last week's top performing cryptos and where they could be headed next. All this and more in just a moment. Last week, BTC experienced an epic crash below 54K. This crash was caused by a combination of BTC selling by the US and German governments, fears of Mt. Gox creditors doing the same, and almost $1 billion of BTC longs being liquidated. Believe it or not, but the local bottom for BTC could be in. This is because of an important contrarian indicator. After weeks of enormous outflows and sluggish inflows, the spot Bitcoin ETFs experienced their largest day of net inflows in weeks on Friday. This is significant because it suggests that the spot Bitcoin ETF investors were aggressively buying the dip. It's even more significant when you remember that most of these spot Bitcoin ETF investors are reportedly retail investors. What this suggests is that the last week's crash was not driven by capitulation by BTC holders. Rather, it was driven almost entirely by government BTC sales and leveraged liquidations. Funnily enough, the catalyst that caused the drop below 54K was the news that Mt. Gox had begun distributing BTC to creditors, and the catalyst that caused the sharp recovery was the news that the BTC distribution could take up to 3 months to complete. This will even out any BTC selling by creditors. Now, make no mistake, BTC isn't out of the woods just yet. First, it needs to get above 58K, and it's possible that it's already done so by the time that you see this video. Second, BTC needs to get above 60K. This will put it back in the 60 to 70K range that it's been trading at since February, i.e. back to normal. What happens after that is anyone's guess, but it seems that big BTC holders believe that there could be more downside in the not-so-distant future. That's because on-chain analysis suggests that BTC whales have been transferring hundreds of millions of dollars of BTC to exchanges in recent weeks. Not only that, but on-chain analysis also reveals that hundreds of millions of dollars of old BTC has been waking up as well. This begs the question of who these old BTC holders are and why are they selling? We think the answer is in Chinese investors, as China was ground zero for Bitcoin and crypto back in the day. As to why these investors are selling, our best guess is that it's because China's economy isn't in the best shape. It's possible that these Chinese investors are trying to find what they can sell so they can pay down debts or make ends meet. Alternatively, they could be preparing for more economic pain. There is more about the possible recession in the description. Now, if BTC does get back into the 60K range in the coming days, then it's likely to rally up to the Bollinger Band moving average on the weekly, which currently sits at around 64K. If BTC does get above the Bollinger Band moving average on the weekly and breaks above 70K, new all-time highs could come. By the way, if you want to make the most of this potential rally, then be sure to check out the Coin Bureau Deals page. It's got trading fee discounts of up to 70%. and sign-up bonuses of up to $100,000. These are deals that you will not find anywhere else, so be sure to take advantage of them while you can. Now, speaking of BTC whales and old BTC holders selling, some of you may have noticed that we're seeing the same phenomenon with ETH. ETH whales have also been sending large amounts to exchanges in recent weeks, and old ETH wallets have also been waking up and doing the same. When it comes to ETH, this phenomenon is a little bit easier to explain. It's likely that ETH investors are preparing for the spot Ethereum ETF listings. This is further evidenced by the fact that Grayscale's Ethereum Trust is trading at a premium, not a discount, premium, relative to the ETH the trust is managing. To refresh your memory, Grayscale's Bitcoin Trust investors were buying shares at the trust leading up to the conversion to a spot Bitcoin ETF. This was because these shares were trading at a premium relative to the BTC back then. This made it possible to sell these shares at a profit when they became ETF shares. Well, not surprisingly, these arbitrage traders have been doing the same with Grayscale's Ethereum Trust, which has been trading at a steep discount until the SEC's initial spot Ethereum ETF approvals in late May. What is surprising and different is that shares in the Ethereum Trust are now trading at a premium. This suggests that investors are extremely bullish on the spot Ethereum ETF listings. To bring you up to speed, the SEC still needs to give a final approval for the spot Ethereum ETFs to list. The final approval is expected to take place today, and it's possible that it's already done by the time that you see this video. Conversely, it's possible that the spot Ethereum ETF listings have been delayed again. Believe it or not, but it's also possible that asset managers are working with the SEC to delay the final approvals. That's because launching a spot Ethereum ETF in these market conditions is probably not such a good idea. In any case, the predictions for what the spot Ethereum ETF inflows will look like, they do vary, with some expecting that ETH will fall by 30% on the back of low to no inflows, and others expecting it will explode to new all-time highs because of record-breaking inflows. The truth will probably be somewhere in the middle. To refresh your memory again, there were considerable outflows from Grayscale's spot Bitcoin ETFs as a result of the Bitcoin Trust arbitrage trade. The result was that BTC's price was traded sideways to down for the first 2 weeks. It's possible that ETH could see similar price action after listing for the same reason. Then again, the fact that the Ethereum Trust shares are trading at a premium suggests that there's going to be lots of demand for the spot Ethereum ETFs. If you watched our recent Ethereum update, you'll know that this could be because investors are starting to see Ethereum as a blockchain for real-world assets. Regardless, the ETH chart suggests there are 2 scenarios on the table. The first is that the spot Ethereum ETFs are delayed or are listed but perform poorly. In this case, ETH could fall to 2.4K. Alternatively, it is possible that the ETFs are listed and perform well. In this case, ETH could rally all the way up to 4K. I'll remind you that the CoinBureau Deals page has the tools you need to maximize your profits, whichever way ETH's price will go. Now, it's possible that the reason why Ethereum Trust investors are so bullish on ETH is because they see something that we don't. Specifically, it's possible that they believe we could see a pro-crypto regulations being passed in the US in the coming weeks as politicians compete for the crypto vote ahead of the upcoming election. In case you missed the memo, crypto has become politicized. The practical effect of this has been to increase the likelihood that pro-crypto bills could become law with bipartisan support. This became clear after the US politicians passed a bipartisan resolution striking down an anti-crypto SEC rule in May. To clarify, the resolution that was being passed is not the same as other pro-crypto bills currently working their way through Washington. Whereas these bills are jam-packed with provisions, the resolution was simple, containing one provision: cancel this SEC rule. Of course, it was vetoed by Biden after it was passed. Now, US politicians are going to attempt to veto Biden's veto. This will require the support of 2/3 of politicians from the House of Representatives and the Senate. Once upon a time, the possibility of such bipartisan support was impossible. Today, many believe it's possible, if not likely. What this means is that by the end of the week, financial institutions such as banks could be allowed to custody crypto for their clients. This should make institutional investors more comfortable investing in crypto, as they'll be able to store it with entities they know and trust, rather than crypto custodians. More importantly, if the veto of the Biden veto passes, along with strong bipartisan lines, then it would open the door to politicians pushing through more pro-crypto legislation. Most notably, these would include FIT21, which would basically give the CFTC more authority over crypto and take some away from the SEC. FIT21 was approved by the House at the end of May and is awaiting approval from the Senate. It was initially believed that the Senate would sit on the bill for months, but a bipartisan veto of Biden's veto would likely incentivize them to act sooner. If so, FIT21 could become law by the end of the month. Obviously, this assumes that Biden doesn't veto FIT21, but that assumes that Biden will still be president by the time FIT21 is passed. There is growing speculation that Biden could not only bow out of the upcoming presidential race, but also step down as president for health-related reasons. On the off chance that this happens, Kamala Harris would become president, and she could approve FIT21. It's a bit of a stretch, but if all of this did happen, then Harris could possibly even approve one of the many stablecoin bills that have been tabled by pro-crypto politicians. This would be a very big deal. That's just because these stablecoin bills would make stablecoin payments possible. In turn, this would make it possible to create new crypto use cases and to supercharge existing ones. This would be especially bullish for smart contract cryptos that have been positioning themselves for payments, such as Solana. Note that we'll be doing another Solana update video real soon. In the meantime, you can check out our most recent ones using the link in the description and subscribe to the channel if you haven't already. Now, on the topic of unexpected political developments, you may have noticed there have been some unexpected geopolitical developments over the last week or so. For starters, a ceasefire in the Middle East. This would mark a first pause to the fighting since November last year. For context, fears of escalation in the Middle East have been one of the biggest factors weighing in on the markets. Escalation back in April was a contributor to the crash in stocks and crypto at the time, and there were concerns that we could see even more escalation in the coming weeks. And in a similar manner, Ukrainian President Zelensky is reportedly open to peace talks with Russia. The news comes shortly after Hungarian President Viktor Orban visited Zelensky in Kiev. Orban has since visited Russian President Vladimir Putin in Moscow with the explicit goal of negotiating a peace deal. For reference, Zelensky recently held a peace summit in Switzerland, which excluded Russia. Zelensky is now open to organizing a peace summit that includes Russia, and it's ironic that the EU politicians are trying to save face by claiming that this is all Orban's doing and that they are not involved. Although escalation in Eastern Europe wasn't as much of a concern for the markets, it's been another factor that's been keeping inflation elevated in much of the world, contributing to higher interest rates. It's also been another source of uncertainty that's been keeping investors on the sidelines. For those unaware, there is nothing investors hate more than uncertainty. Certainty in the Middle East and Eastern Europe could therefore be incredibly bullish for stocks. Given that crypto is loosely correlated to stocks, it's likely that most cryptos would benefit from this as well. The caveat is that these conditions could be temporary. A ceasefire isn't a peace deal per se, and it's quite possible that there will be additional escalation in the future. It certainly makes you wonder why all of this is happening now. It wouldn't be so far-fetched to assume that it's related to the US election. After all, it's easy to forget that the average person, they don't want war. And the average person also isn't happy that billions of dollars are being sent overseas and spent on weapons when they're struggling to make ends meet at home. Getting these optics out of the way makes life much easier for the political elite. With all that said, it is about time that we take a look at last week's top performing cryptos. So last week's top performing cryptos were Multiverse X, Mantra, Notcoin, Tether Gold, and Tron. Starting with Multiverse X, its EGLD coin appears to have pumped due to the project's partnership with SafePal Wallet, making EGLD accessible to its 13 million users. EGLD is currently struggling to get above a key resistance level at around $35. If it does, then it could rally up to 50% in the short term and as much as 3x in the medium term. Note that this ultimately does depend on what happens with BTC in the coming days. Next up, we have Mantra, whose OM token appears to have pumped on the news that the project will tokenize $500 million of UAE real estate on its upcoming Layer 1 blockchain. Similarly to EGLD, OM is struggling to get above a key resistance level at around 90 cents. If it does, then it could rally by 10% in the short term and as much as 50% in the medium term. I'll reiterate that this ultimately does depend on what BTC does in the coming days. When it comes to Notcoin, Not appears to have pumped after the Toncoin game revealed a $50 million gaming accelerator with Helka Gaming. As you might have guessed, Not is struggling to get above a key resistance level at around 1.5 cents. If it does, then it could likewise rally by 50% in the short term and potentially even pull a 2x in the medium term. I'll repeat that this ultimately does depend on BTC. As for Tether Gold, XAUT appears to have pumped as a result of a flight to safety. FYI, it's a common for crypto investors to rotate into gold-backed stablecoins during crashes. The consequence is that it does cause their price to rally and sometimes even depeg to the upside relative to gold that's backing them. Interestingly, XAUT appears to be painting a head and shoulders pattern, and the same is true for gold itself. Considering that gold is fundamentally a hedge against inflation and also geopolitical uncertainty, this does suggest that we're about to get lower inflation figures or less geopolitical uncertainty, maybe a bit of both. Note that you can also get our weekly market forecast by subscribing to our weekly newsletter. The link will be down in the description. Moving on. Now, finally, we have Tron, whose TRX coin appears to have pumped on the news that the project is developing a zero-fee stablecoin solution for Ethereum-based blockchains, as well as its own. Lo and behold, TRX is struggling to get above a key resistance level around 13 cents. If it does, then it could rally by more than 10% in the short term and as much as 60% in the medium term. Note that short term means days or weeks, whereas medium term means weeks or months. And if you want to keep track of which cryptos are rallying the most and also where you can trade them, be sure to check out the Coin Bureau Insider Telegram channel using the link down in the description. Well, that is all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, then you know what to do. Hit the like button, subscribe button, and bell icon too. Don't forget to check out our deals page where we have massive trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on some of the best exchanges only for the viewers of this channel. Also, if you do want to pick up some snazzy crypto merch, then the Coin Bureau merch store, it has you covered. You can find the link to those resources and many others down in the description below. Thank you so much for watching, and we'll see you all in next week's episode. This is Jessica signing off.